Okay, June 18th. Um, we had a busy week last week. Hopefully, you guys found some good opportunity to make you a little cheddar, a little cheese. We got a lot of significant news, as far as the US dollar. Um, we got a couple of other surprises, in my opinion. Let's see if I can share this. Okay, this is the global rates, globalhyphenrates.com website. Um, we can go to this site. We can look at the interest rates for the different countries. For those of you who know me, this is our bread and butter site because the interest rates ultimately drive the currency, right? So all I did was I clicked on central banks, and then I changed this, clicked on change right here. Change will sort by date who had interest rate changes. All right. So a lot of people probably didn't realize that Great Britain raised their interest rates the day after we did. Um, it was an insignificant raise. It was 25 basis points. Um, so you didn't get a lot of oohs and ahs over that. Okay. Um, the Swiss franc, however, they raised their interest rates 50 basis points, which is a huge move for Switzerland. All right, Switzerland is a safe currency, kind of like the yen and the dollar. Um, so them raising their interest rates 50 basis points was huge for their currency. So if you were in any chef pairs the last couple of days, you probably noticed a pretty big push um in the upwards direction, right? Like I think that's going to continue over the next week. It'll push to the upside, kind of like the dollar, right? The dollar moved prior to the interest rate push. The day that they announced the rates, it retraced, and then it started pushing back, to the upside. So if you if you're following these currencies, kind of from a swing trader perspective, or from a higher time frame perspective, you can kind of get a better understanding of why a currency is moving the way it's moving. Um, sometimes we get caught up because the currency doesn't immediately take off in the direction that we feel like it should take off when the news is released. But many times, um, the market has already priced that move in, or the market has moved prior to that news coming out, and either you didn't recognize it, or you missed it, right? So just a couple of things to understand, when it comes to trying to trade the interest rates. But please lock that website in if you haven't already, because as a forex trader or currency trader, you're gonna want to be on the right side of those interest rates moves. I guess we can. Alrighty, so we have the a bank holiday, I guess, tomorrow for the U.S. Juneteenth. European Central Bank president will speak Monday, and we got the AUD policy minutes coming out, and after that, Tuesday you got retail sales for the CAD. If you trade the CAD or I guess any other currency that you're trading, when these retail sales come out, it's probably pretty good to start monitoring which direction, like when they start to taper off, because at this point everybody's talking about recession. Those numbers are going to tell you the truth. When they start tapering off, then you can start seeing the slow of the economy in whatever country that currency is in. So might be worth monitoring going forward, especially since you have the inside track on the recession news. Okay, so also big in the news last week was Japan's refusal to raise their interest rates. The reason why it's important to us is because we kind of have a money train now, right? We can kind of trade against the yen, trade those yen pairs to the upside, but especially Chef JPY and USD JPY. There was an article that came out that was saying that if we raised our interest rates 75 basis points, which we ended up doing, that it would possibly push the USD JPY to 150. That's a full $15 move. It's about a it's a $15 move. So it's a lot of pips if you want to trade that pair to the upside. Chef JPY is also going to probably make a pretty significant move to the upside. I honestly don't know why they're not raising. I mean, every other country is raising interest rates besides Japan. So go figure. But I think the entire world is looking, at them like, WTF right now. So take advantage of the moves to the upside, especially on the Chef JPY and USD JPY. So I guess that we can just go right into the little analysis. When I was looking at these pairs or these charts, I noticed we got a bearish order block on AUD JPY. You can't help but notice that this trend is going straight up. So, if you're trading against the trend, then you do that at your own risk. And I'm not saying that you won't make, any pips, but, just probably not the best move or the smartest move, right? I'm looking for the yen pairs to go to the top side. I mean, they are going to have pullbacks, towards the moving average, which is cool. That's always cool. But your best bet is to take the longs on these yen pairs, and you can wait until they approach the moving average to try to get you a a buy position. So that's with a couple of these yen pair that I saw, like Canadian JPY, AUD JPY. I personally wouldn't look to trade these to the downside. I would look to trade them to the upside, understanding that the fundamentals behind the move is, the Japanese monetary policy. They refuse to raise interest rates when everybody else is. Inflation is high everywhere, so it's not just here in the U.S. I know we listen to U.S. news, but inflation is high everywhere. Okay. Somebody asked me this week, about the fundamentals and the equity markets, or the indices, Dow Jones and the Nasdaq. As a general rule, raising interest rates is going to be to the detriment of the US 30 and the Nasdaq, at least initially, right? Businesses borrow money in order to make money, and it becomes more expensive to borrow money when the interest rates rise. So anytime you hear about interest rates rising, it's going to push those indices down, right? So if you're trading indices around the time that they're raising interest rates, you always want to look for your sell positions, right? Where's my US 30? Okay, we've pretty much been calling the US 30 down since January, right? We've been trading it to the downside. I think all the experts out there will say we're in a bear market now. I guess we are in the bear market. The market is trading at 20% off the highs. So that's technically a bear market. We talked a little bit last week about the US 30. So if you look at it now, the high before COVID was right here. And price is right back here now. So we've now come full circle. All right. The year of COVID, when the market went straight up, it no longer exists. So the tactics and techniques that were used to make all that money during the COVID crisis, they won't work now. So if you notice, we're on the other side of that curve where everything is going down. For how long, we don't really know, but for the foreseeable future. Okay, we expected the Dow Jones to tank, and it did. I was looking at this chart, I guess 2 days ago, and I went down to the 2 hour and found an imbalance. I personally would like to see the market return to this level before I take a sell position back down. Now I realize this day, some of you could have traded it up, right, during the Asian session, and then sold on Friday, but I personally don't like the market when it's going back and forth, right? It's too much work in order for me to make money. So what I'm personally waiting on is for the market to push back up and then drop. I don't know when that will be, but I know that there's an imbalance here that needs to be filled. And I do trust that at some point, this week that we'll come back up, kind of like the market did right here. See how we had that imbalance and it came up, it tapped right in and eventually cooked off. Maybe it will take several days. I don't know, but my interest will be when the market comes back up. You guys trade it however you trade it, but just understand that it's a lot of volatility, a lot of back and forth. And, I guess if you're watching it, it's a great deal of money to be made. That's about an 825 point move. And if you've been trading the Dow lately, 800 to 1,000 points ain't nothing. Just make sure you don't get caught on the wrong side of the move. To me, there are easier pairs to trade, with a little less volatility and a little bit more understanding of what direction to be on than, this Dow Jones. 1 minute is going up, 1 minute is going down. We understand that the up moves are retracement moves, but, we're in a situation now when somebody gets up and speaks and the market moves 400 points or 600 points. So, if you're going to be out there in those US 30 streets or NASDAQ streets, make sure you are protecting yourself to, whatever side with a decent size stop loss, right? You don't want to blow your account because somebody says something in front of a camera. Everything that I've heard, come out of the Fed's mouth, has been kind of in line with Joe Biden saying that inflation was the #1 enemy or whatever. They want to combat inflation. That means they're just going to raise these interest rates as high as necessary to combat this inflation. At some point, it'll bring the economy to a screeching halt, and we'll be in a recession. But it is what it is. You're either going to get hurt by the recession or you're going to get hurt by the inflation. Either way, you're going to get hurt. So make sure that you are guarded, against, I guess making fatal flaws in your trading account, right? You could possibly make a lot of money during these quote unquote bad times, bad economic conditions. All you have to do is trade the charts. I mean, you understand the fundamentals behind the move. So now all you have to do is wait for your setups, be patient. You don't necessarily have to take every trade, and you don't have to make $1 million on every trade, right? Follow your trading plan, wait for your setups, and then take your trades. Where is gold? Okay. Gold. Gold is right on schedule. We had gold coming back up. It didn't come as high as we thought, but then we have it pushing down. I still feel like it's going to push down. It gave us a weekly bearish OB right there at our moving averages. All right, went a little bit. This wick went a little bit higher, but it looks like we're right on schedule for the push down. I'm expecting gold to be back, below the 1,800 mark. I don't know if it's going to happen this week, next week, but as the dollar pushes up, gold is going to push down. Hmm. All right, there are back-to-back order blocks up here. I mean, gold is going to push up. I would look for a rejection either here or here. If you're a gold trader, you're gonna have to drop down, on your time frames. But just make sure you're getting confirmation before you hop into gold because it can be expensive. It can be an expensive error. But yeah, I'm looking for it to push down. If you don't get into it right when it first starts pushing down, it shouldn't be a huge deal. Just drop down time frames, find you a different entry, and you can enter the trade probably with a better risk reward than the first opportunity. All right, I added a Bitcoin. I, this is something that I've been looking at for a while. Um, we had this huge breakout. Inevitably price was going to have to come back down um, to where this price broke. I kind of tried to break this down to where I thought that the price would come back to. Um, so I'm looking for price to push at some point down to the 12,000 range. I know that seems absurd, but I think when I first started talking about this, price was still in the 40,000 range. But it's just based on, your break and retest. And, here we are now with prices about 20K, and nobody thought, a lot of, I didn't hear any talking heads saying that we'd be back at 20K. So I'm not trading a Bitcoin at this point. I mean, you could be trading it down. If you are, you're making a lot of money, kind of like the indices. There are a lot of great setups. But once Bitcoin comes back to my area, I will be interested in the longs and taking it back to the top side. Who knows when that'll be? I mean, maybe it'll be the next month, maybe it'll be the next 3 months. That to me, that's not really the important thing. It's just the fact that it's respecting the analysis that's it's kind of powerful to me. So um, if you are watching, Bitcoin, or maybe you weren't watching it, maybe you can add this to your watch list and kind of look to see if it respects the analysis and if you understand or agree with the analysis, right? This is a monthly chart. We got that break right here, that break of structure. There's a monthly order block. That's what I pretty much plotted right here. And I'm just waiting for price to come back and touch it. It's not anything advanced or super advanced. It's just the way that we expect price to move, when you start looking at smart money concepts. So we'll see how everything shakes out. But this could turn out to be a pretty lucrative move if this does happen. You said, what are the fundamentals? Well, I mean, yeah, uh, they're like any other asset class. Um, once the institutions got involved with crypto, it's going to behave the same way that those other indices behave. So I just feel like that this is what banks are doing to get you to sell your crypto. Depreciating it. Same way they do your neighborhood. Depreciate it, let it go bad. They don't fix the streets. Then once the property value tanks, the investors buy it, remodel it, and resell it for, you know, millions over what they paid for. You know, it's the same with these Bitcoins. Everybody was talking about Bitcoin going to 100K, and you know, it pushes up, now it tanks. So the novice investors are getting rid of their Bitcoin, and the rich people or banks are buying it up. It's going to push up to the upside at some point, and they will make all kinds of money on the cheap buys that they made. All righty. My brother said it'd push up in 2024. Um, Moving right along. Okay, NASDAQ, I don't really talk about a lot. You know, Fred has NASDAQ on lock. Um, for those of you who don't know, Fred is a altcoin. But he has his own little page on Discord. And he's been calling it pretty accurately. But for the most part, the Dow and the Nasdaq have been pretty lockstep. Um, the Nasdaq has the same daily OB. I think price push up a little bit further for the Nasdaq, but I would drop down to look for your imbalance, because it probably needs to push a little bit higher. I looked at the German 30, same thing. You know, it's going to be interesting, you know, to see, because it's not just the U.S. economy uh, that's looking at recession. This is like global, so it'll be interesting to see the different monetary policies that are employed by the various central banks. Okay, um, you know, Japan in particular is, you know, they're walking by themselves. They're Gary Owens. They're standing by themselves by not increasing interest rates. Everybody else is increasing interest rates, and we'll just kind of have to see how it shakes out. You know, maybe at some point um, we will end up relaxing interest rates, but I don't know. I don't know how that's possible. You know, when we've printed all this money. All righty, let's look at some of these opportunities. Guess we can look at these chef pairs. Um, this is probably a Essence all-time favorite right here. Essence, are you trading AUD chef? All right.
I was, not no more.
Well, you would get out of it once it starts making money.
Yes, like always.
Yeah, well, you can trade this to the downside. I mean, this thing went 217 pips. I think we were talking about this last week, and I was like, I wouldn't trade it because it doesn't move enough pips. And of course, it moves 217 pips. It's a huge move for AUD Chef. Again, this move was sponsored by Chef raising their interest rate 50 basis points. I would look for a retracement. Then you can hop in for the sale. GBP chef, same deal. Look for the retracement. So you can get in for the sell. Euro chef is going to be the same. NZD chef. So chef has had these great moves. What I've started doing is kind of waiting, like waiting as far as WEI, GHT, waiting my trades, right? Like since I knew that this was going to cook off, I want to make sure that I get, my two positions or three positions, whatever I'm going to take in this trade to make whatever percentage you're trying to make this week. If you're trying to make 4%, and each trade is set up. Let's say you're not doing the full 1%, you're doing a fraction of that, right? And you're trying to make 4% a week per trading plan or whatever. If you add two positions, you can get your 4% on one move. Done for the week. I personally find that the trade setups that I see during the weekend kind of play themselves out perfectly. And a lot of the trade setups that I see during the week are iffy, maybe I'm not seeing the market as clearly, or maybe there's just a lot more volatility in the markets due to the ever-changing environments, with the war, with the different banks posturing because of the inflation, or people being nervous because of the recession. So you're going to have to kind of figure out a system that works well for you, right? If you noticed that your trades that you plot on the weekend play out, then you should just trade those trades, right? And if you miss those trades, or if your analysis doesn't work out, then don't trade. It's kind of like when you're sick, you don't go to work, you call out, right? So just stay out. It's better to not trade and keep your account at the same spot than to jump in a trade and lose money, on a setup that you are gambling on or you're not sure about. So just keep that in mind as you start trading. Like if you have a setup that you pick out, or you have two setups that you pick out, if they work out, that's cool. If they don't work out, then just wait until next week. It's not that serious, and if you avoid making an error, it might be 2 or 3 months before you you have your account to the size that you need to start making real money, the money that makes an immediate impact. Okay, so NZD CAD. All right, I like NZD CAD for the buy, right? It double bottom, I don't know how high NZD CAD is going to push back up, but I've been wanting NZD CAD to push back up into this area, right? Before it sells back off. Basically following the break and retest rule, right? We broke structure to the bottom side. I like to see price push up to the order block that causes us to break the structure before price pushes back down. It would also give us a decent size retracement. All right, here's the golden zone. There's the 78.6 right in my area of interest here. before price cooks back up. Now, it's nice to have all this stuff, marked up and highlighted and whatnot, but it doesn't necessarily mean that it's going to happen. But, it gives me hope when I see the double bottom, the order block. If you notice this wick right here, snatch the liquidity, which tells me that we're probably going to get a pretty good run up. Created equal lows here. We snatched the recent liquidity. We should get a decent run up to our area. Then I expect price to come down and take these lows out. Darn it, that's how I'm going to play it, right? So if you're interested, in this trade, mark it up, look at it. I think the setup is pretty clean. I think that this liquidity right here was just engineered perfectly. When you have equal lows, these pretty equal lows right here, they'll get snatched a little bit later. So again, we snatched this immediate liquidity. Now I expect the market to push up. If it does push up to my area, that's about a 400 pip move from the bottom. So that's about right. If you're taking this trade, wait for it to push down. Here's an imbalance here. So maybe price will push down, touch this imbalance, and then push up. Yeah, that's about right at the golden zone. USD Jappy. All right, if you believe the talking heads, then 150 differently. All right, you can target 150 area. I mean, obviously, price isn't going to push straight up there, but maybe we'll get a pretty significant push right off the bat. If you were in this trade Friday, You got a lot of money, like 200 and some pips on Friday. Did anybody trade UJ Friday? Almost 300 pips. Anyone? Anyone? Nobody, huh? Y'all sleeping. So I would look for UJ to hopefully retrace a little bit. I mean, UJ never really does what I think it's going to do, but um, like it doesn't retrace into the order block a lot. It just pushes off and it's gone. I don't see much imbalance. I see one right here. It would be nice if it retraces. Um, but you know, good luck with that. All right, I'll look for it to maybe retrace to this level and then start heading north. You know, if not, I'll have to find the entry on a lower time frame closer to the moving average. Any questions? US oil, man, US oil did not do what I thought it was going to do at all. I expected oil to push up. It actually started pushing up, then it just collapsed. On recession fears, right? So if you don't have an economy, your need for oil there slows down. At this point for oil, to me, it's at a key area. They actually violated this order block. So I'm not, I wouldn't short oil. If you're an oil trader, I know we have one oil trader. This day the order block is a sell. If it comes back up and taps in, maybe you can sell it back down to this low, but I don't know how far down it will push. I know oh, excuse me. I know Russia announced it was going to cut natural gas off to France and a couple other places, but all they have to do is probably make an oil announcement and the price will shoot back up. If you're trading oil, just trade with a tight stop loss. I know that the daily order block and weekly is for it to sell. So if you are going to short oil, I would probably just short it to equal lows at this point. If it does break through the moving averages, then we'll have to find more targets. Maybe this imbalance right here. We'll have to find more targets as the price pushes down. So if price breaks here, then maybe your next target will be 101, right? All of us would love to see oil back at 101. You know, maybe the gas prices will fall a couple of cents. Excuse me. All right. So if you're trading oil short, I mean, if you're shorting oil, you know, just be careful. But that's what the technicals are saying. The price is going to drop. All right. Does anybody have any pair that they want to look at? Any trade they want to talk about?
EN, Euro NZD.
I think I looked at Ian and I didn't really care for the chart. IRO NZD. Okay, so with Euro NZD, I was looking for it to push down. I know that UCAD is up, Elfie. The the European Central Bank had an emergency meeting. I didn't find out, or I guess I haven't researched to find out what came of that meeting. But excuse me. If they raise, or if they're talking hawkish, even if they don't raise interest rate, but if they're talking hawkish, it's going to delay this push down. All right, but I still expect this to push down, right? I just don't have the order blocks to match. So I need to really research, I guess, what happened with that emergency meeting with the European Central Bank. This is a bullish order block, but we're right here at the trend line. I would kind of wait to take any trade on this pair because your range right now is not very good. You're in a bearish order block right here, and there's a bullish order block. So either price is going to push up through this order block, or it will push down, break your moving averages, and it'll give us another order block to take the trade down. There's just a lot better setups than EN, at least starting off the week. Are you in a trade with EN?
I am not. I got out, and everything you said, I witnessed. So,
Yeah.
yes, thank you.
Yeah, I looked at this pair and I didn't like the chart. So you know, I think at some point last week I was really sitting on it, you know, because I thought it was going to make a move. But you know, once they announced that meeting, the price kind of froze or whatever. You know, kind of got stuck in this little area. To me, there are better setups that they're going to give you the move that you're looking for versus waiting to see what this price is going to do. Elfie, you said you went to look at this pair?
Yeah, because it kicked me out last week. I was just,
what were you doing? Were you buying or selling?
I think I was buying it and then
Yeah,
it
you
went
were
down
buying it
because
while
of
it
the
retraced,
news.
I think.
Yeah, it was retracing on me that
So
day. I think it
yeah.
was, yes.
Yeah, I think I remember that.
That was
So
like a news day, I think. Yeah.
yeah, so it was the day that they raised the interest rates.
Mhm.
And this is what I mean. Like, if you look how far it went up. Then they announced the interest rates raised, it just retraced, and then it pushed back up. You're in the right direction if you're buying it. You know, I know you got caught in a bad trade or whatever, but I expect for all the USD pairs to push to the upside. Um,
So you think it'll continue and then I can just look for a retracement in order to get back in? Or,
I do, but this is what I would ask you. Why USD CAD?
I don't
Why
know.
not, why not
No.
USD JPY?
Well, we're just going through it. I was just, I guess, stuck on UK.
So, you know,
I get stuck. I got it.
I'm just asking because as a trader, you want to pick out the best opportunity for you, right? And I don't think there's anything wrong with USD CAD. Don't get me wrong.
Mhm.
But I think you get more bang for the buck with USD JPY. I think they're all going to go up.
Okay.
But like JPY refuses to raise its interest rate. You know that's going to go up, right? Like we raised our interest rate a record high. Like we haven't raised it 75 basis points since the 90s, right? So
Mhm.
you know what's going to happen. USD CAD, I mean, you know it's going to go up too, but maybe it doesn't go up the same amount that the USD JPY goes up, right?
Okay.
Or Chef JPY, or those Chef pairs, you know. Um, I was just asking because it's always interesting to me when people
I
refuse to
guess I
trade.
was stuck on it. Yes, I get it.
Okay. Not that that's a bad trade. I mean, I still think it's a good trade to the upside. I just think you're gonna make more on the other one. Anybody else? Felicia? Brad, come on, Brad. Anybody trading GM? That's good. You're trading GM. Um, I'm still biased for the upside, but it's a lot of turbulence in here. It's not a straight up move. We know that the Brits raised their interest rate 25 basis points Thursday. So, you know, maybe we'll get a little bit more movement this week. It last week you can look at it as it tapping into the order block. Maybe this week it'll start pushing up. But I like the other pair. I think it's some easier moves than to take this pair. The appeal about the trading the New Zealand dollar is that the pip count is crazy. If you can catch it right? Like if you caught this GN trade and it went up, you know that I mean that's a lot of pips. So I understand the appeal in trading those, but if you're not 100% sure, it's to me it's easier if you trade the moves that are more obvious and more clean. You guys want to look at anything else? Does everybody understand the fundamentals out there? Monk, you say you do understand the fundamentals?
Can you do one more?
Yeah, which what do you want to see?
I'm still basically kind of like new into the getting to the forex. I usually trade like options, like stock options, but I'm just trying to just understand the forex, how the fluctuation move more in the market.
Okay, let me look at this ethanol real fast. Mark, you want to look at the ethanol? I mean, Ethereum. This is the same as
Yeah, Ethereum cool. See, I'm into cryptos as well, so yeah, I didn't know if y'all traded like Bitcoin and Ethereum.
yeah, it's the same principle, as the Bitcoin chart that I put up. So if you look at this, the break of structure, right? Price eventually has to come back to the order block that sponsors this break. I don't see it at this level. It's either going to be this order block. Yeah, it's going to be this one. It passed us too. So I would look for price to push down to the 608 mark, in between 527 and 608. Look for a rejection before I even think about longing this thing. Now, who knows when it'll get there? This is a lot like the Bitcoin situation. Price has to return to the order blocks or the area that sponsored this big burst. Maybe there's more imbalance under this. There is some imbalance down here. Okay, so once price gets down to this level, if we don't get a rejection, then we need to wait for price to come down in the 300 range and look for a rejection at this imbalance. Let me throw the GAN box on this joker. It sounds unbelievable that we've been talking about price back down in this level. I remember when I first started trading with Ruby, we used to talk like we missed the boat, like price will never be back down here.
That GAN box you use, is that similar to the GAN fan, basically?
I don't know about the fan. I see it, but I don't know how to use the fan. The GAN box I just use to get the halfway point, the 50% mark.
Okay.
Yes, it's pretty much the same, Monk. Did you see the Bitcoin chart? Were you here when we talked about Bitcoin, Monk? Okay, yeah, so it's pretty much the same line of thought. With this Bitcoin, I did this, I don't know, What, Sean, last month, a month and a half?
I think it was longer than that. You told me it was gonna go back down here. I didn't think it was gonna go below 20, but guess your punk ass was right. So,
I just looked at the chart. Yeah, I mean, I knew it. I mean, it's nice to see it working out, but when you do it and price is way up in the 40s or something, it's kind of unbelievable to think that it is going to end up way down here. But I didn't trade it, so it doesn't matter.
This ETH chart don't surprise me. I mean, this stuff trades on them halvening cycles. So I remember ETH at $80, during the last cycle or after the last cycle crash, it crashed down to $80. And I think that cycle high was probably around 1,200. And when everything was said and done, it was down at like $80, and it was there for a long time. I didn't understand the cycles back then, so I bought a little, but I didn't back the truck up like I should have. But you best believe this time, the truck is getting backed up.
So what number are we backing the truck up on Ethereum?
Where's that? See that imbalance? I can't see it on my screen. It's too small. But once
down here?
yeah, and
280.
honestly, it might not go down there. I'm just gonna start dollar cost averaging in once it hits that one where your cursor is now. Once it hits in that range, in the 600s, I'm just gonna start dollar cost averaging in, because remember when we were talking about Bitcoin and I was saying it's probably not gonna go back up until 2024.
Mhm.
That's the next happening. So my guess, and I can't say for certain because the institutions are in this stuff, but the last time when it crashed, it didn't go down and then bounce off the bottom immediately. It was down there for, I don't know, a year, 18 months.
Well, yeah, I mean, that's the same thing I'm saying. It doesn't necessarily have to bounce and go up. That's not. Hopefully, nobody is getting that impression. The
It's
point
gonna
is,
bang around.
yeah,
It's gonna
it
bang
might-
around down there. It
Right.
may meander ultimately down there to that low imbalance, but I'm just gonna be buying every month or every 2 weeks, whatever it looks like, once it gets down into the 600s. I think you're gonna have plenty of time to buy, because it's gonna go up and down. It's gonna meander around, most
the
likely.
last time it was down here was 2018. This is December
Yeah,
2008,
2018 was crypto winter. Come on, man.
and then look, this March 2020 was back at the same level. So
Right. And I think August of 20 is when it started taking off. So you're likely gonna
Yeah.
have a lot of time to get Bitcoin and ETH and whatever other crypto at great prices. So I'm not gonna go drop 20 G's on one at one time. I'll just buy, every month or every 2 weeks or whatever.
now, here's the deal: if you're trading the crypto on Forex, of course your strategy will be a little bit different, right? Because you're probably not going to buy and hold for 2 years, right? Unless you buy right here and it shoots up like this, then you can hold it for however long. But as it matriculates around down here, you're going to buy and sell based on your order blocks in that area.
Right. I forgot to mention, I invest in it too. And I'm talking about investing versus trading.
Any other questions? Is anybody trading USD pairs? Bruh. None of y'all trading USD pairs, even though that was the interest rate move. Yiggy, yes, yo. All right. Let me get rid of some of this stuff. Prince, you should trade UJ. It, and if you ain't busy after this, we'll get together. But this is what I'm looking at for, you know, most of these most USD pairs, right? If you're paying attention, you know, to the higher order blocks, you know, they're kind of setting up to support the thought process that we've had, you know, throughout, right? Like you can see, we talked about the price coming back up, pushing down. Eventually, it needs to come back up to this area, right? I don't know when that'll be, but I think we'll push down a little bit further. And then at some point, we need to come back up and revisit this area. The monthly chart is setting up to say the same thing. So this, you know, we have what, 10 more days, 12 more days in June. So if this holds, right, which I believe it will, you know, maybe it'll push down a little bit further. So if June ends and this is a bearish order block, then what we kind of expect to happen is the start of the next month, we want price to push up into this bearish order block before it sells off. Is everybody tracking?
Yes.
So this kind of supports, you know, the thought process that we've had all along. So if you're following these moves on a weekly basis, and if you're attending this call on a weekly basis, you should kind of have an inside track on kind of how you expect to see the market. Now the news comes out, you know, there'll be different news events that push the currency in different directions, but because you understand how the chart is set up, you're not panicked or fooled into you know, taking the fool's gold. You kind of already see where we're headed. You know, just like we got this bearish order block, we got to push up into the order block. The next month we push right back up into the order block, and now we're selling away from it. If you sold this order block and you had your stop loss right here, you're in profit. Regardless of the news, and there's been all kinds of news that came out since April. This is April this year, right? There's been all kinds of news about, you know, the war, the economy, all kinds of crap. Will we raise interest rates? Won't we raise interest rates? How much will we raise them? Price, you know, it fell just like this order block told us it would fall, just like we expected for it to fall. So don't get fooled by the talking heads out there, you know, whoever you listen to, your favorite financial person. Look at your charts, you know, understand the core fundamentals, right? Interest rates were raised, what do you call it? Inflation is out of control. You know, we have a strong dollar based on, you know, on other currencies across the globe. So we should expect these other currency pairs to continue to push down against the dollar, right? Might be fluctuations. They might come out with news that sends the price back up. But you know, when the price goes back up, it's going to go back up to satisfy an area that needs to be satisfied, right? And if you understand how to look at the higher time frames, then you'll understand kind of why price is moving the way it's moving. But if you take a zoomed out view, you're having lower lows and lower highs, right? That's the important thing. Any questions? I encourage you, if you're struggling with some of these concepts, or if you're new, come back tomorrow for the intro to smart money concepts. I think we've covered some really good ground, in that series. We talked about, order blocks, imbalances, Wyckoff, and market structure. And I think a lot of, for the people who attend that, I think a lot of the concepts are tied in pretty well, in that series. So if you're struggling with concepts, then I'd invite you to look at those videos, or just tune into the series, and it'll kind of straighten out some of your viewpoints and what you're looking for. It'll help you understand where the liquidity is, right? And how to view liquidity grabs and all that good stuff. All right. If you guys don't have any other questions, we'll go ahead and end the meeting. I can't really stress enough that, the weekend is when you find your setups, and as long as that market plays out to your analysis, then you take your trades based off of what you saw and what you analyzed this weekend, right? If stuff starts to get crazy, if a pair breaks your analysis, then don't trade. It's better to sit it out than to lose accounts or unnecessary money. But that's gonna do it for this week's meeting.